Welcome to In Depth for a closer look at what is making mining headlines in the Americas. ArcelorMittal and the Nunavut Iron appear to have succeeded in their joint offer to buy Baffinland Iron Mines. Mining Weekly's deputy editor for North America, Lizzo, who is based in Toronto, Canada, joins me to discuss this development. Welcome to the show, Lizzo.
Hi, Martin.
This story has been making headlines for some time. What is the latest and what does it mean for Baffinland?
Yeah, it certainly has been generating a lot of headlines and excitement here in Canada. Just to go back a bit in the story, Nunavut Iron Ore Acquisition was a company formed specifically for this purpose. And it all began when they announced in September that they made a hostile or unsolicited offer for a Canadian junior, Baffinland Iron Mines. Baffinland owns a big, high-grade iron ore project up in the Canadian Arctic. And so it actually later emerged after the Nunavut Iron Ore offer was announced that Baffinland had been in talks with ArcelorMittal, the top steel maker, about some sort of potential joint venture. The project, as Baffinland had studied it, would cost some $4 billion. So for a company of their size, certainly they needed to look at some sort of strategic partnership to help finance that project. So they'd been talking to ArcelorMittal, but then along came Nunavut Iron Ore with this surprise offer, and that of course put the company into play. Then, Baffinland rejected the initial offer as too low, and they then went out looking for alternatives. So although the ArcelorMittal joint venture agreement negotiations had lapsed when the Nunavut offer was made, the companies then came back a couple of months later and announced, Baffinland and ArcelorMittal announced that they'd agreed on a friendly offer for ArcelorMittal to actually buy Baffinland. That then set off a bit of a bidding war back and forth between Nunavut and ArcelorMittal, each raising the offer. In the case of Nunavut, actually just shifting some things around. In fact, by January this year, Nunavut was only offering to buy 50.1%, or they only wanted to buy 50.1% of Baffinland, while ArcelorMittal was still saying they were looking at the full 100%. Nunavut actually has acquired around 10% of Baffinland as well, just in market purchases. So that also adds to the dynamics. That 50.1% that they wanted was including the 10% that they already held. So that's where we find ourselves going into this year. As I said, a bit of back and forth, the bidding war. And then all of a sudden, the market was caught quite off guard around mid-January, when ArcelorMittal and Nunavut actually came together and announced that they had agreed on a joint offer for Baffinland. The way that it was structured was that Nunavut said that it would allow its existing offer to lapse, and the ArcelorMittal would amend its offer, and if the deal succeeded, ArcelorMittal would then own 70% of Baffinland and Nunavut would hold the other 30%. So bringing us to where we are at the moment, that offer had been scheduled, the deadline was just before midnight Toronto time on January 24th. The market obviously had been keeping a close eye on it. The two companies had said that they'd put a minimum tender condition on the offer, that they needed 2/3 approval from Baffinland shareholders, or 2/3 of the shares to be tendered. So there were a lot of questions. Are they going to get the 2/3? If not, what will happen? Will it be extended? And would they disclose actually how many shares had been tendered? And there'd also been some questions about the potential for a rival offer. As you know, Gord McCreary, the former CEO of Baffinland, who has dismissed successive offers from both ArcelorMittal and Nunavut as too low. He's been negotiating with the Chinese group, Chinese state-owned entity. He hasn't given the name of the entity, but he said that there's a lot of interest in China, and he was just sort of racing against time to try and put something together. In fact, more recently, I spoke to him and he said there were actually 2 now Chinese entities that were interested. So that's where we found ourselves now. What happened was January 25th, the big announcement was made. ArcelorMittal and Nunavut disclosed that they had, in fact, more than around 50% of Baffinland's shares had been tendered to the offer. So then together with the 10% that Nunavut already owned, that brings their combined holdings to around 60%. Now they didn't get the 2/3, that minimum tender that they'd made conditional on the offer, but the announcement that they made was that they, number one, had extended the offer to allow investors that maybe hadn't tendered, but now knowing that Nunavut and Arcelor own that 60% may want to tender their shares, and secondly, they waived the minimum tender conditions so that those shares were taken up, and that they don't require the 2/3 to complete the offer. So that's where we find ourselves at the moment. As I said, there was some talk about some surprise offer coming out of nowhere, but now that ArcelorMittal and Nunavut they own a majority of Baffinland, they hold control of the company. Analysts in general are saying that it really does seem to be game over here, that it's quite unlikely that there will be another rival or someone will then want to come in and take a minority interest in the company.
Okay, and for how long will the offer remain open?
As things stand, obviously it could be extended further, but as things stand, the offer was extended from the previous deadline just before midnight on January 24th. It's now been extended until February 4th.
What about the project itself? How soon is production likely to start?
We're still waiting for ArcelorMittal. They haven't said anything specific about what they're thinking for the project, and presumably they'll want to then come in and have a look at the plans and see what Baffinland study what Baffinland has been doing so far on the project. Baffinland actually studied two potential development options for Mary River. That's the iron ore project they have. Initially they studied a big 18 million ton a year operation. But because the project is located so remotely up there in the Arctic, they would require big investments in infrastructure like rail, especially. And the price tag, as I said, it was estimated at around $4 billion to build that 18 million ton a year project. So obviously for a small company like Baffinland, although they were in talks for strategic partnerships, it would have been a big ask for them to fund that project by themselves. So at the same time, and more recently, Baffinland actually did a study on a much smaller initial project. What they looked at was around a 3 million ton a year operation, looking at moving the ore to the port by trucks rather than rail, so road haulage. That would be certainly a much smaller initial capital cost. They were looking well below $1 billion, as low as around 600 million Canadian dollars if a mining contractor was used, so that would lower the initial cost. Obviously operating costs would be higher, but that would be something certainly that would have been doable for Baffinland if it were to stay independent. So of course, ArcelorMittal, being the large steel producer that it is, the company is looking to gain its own iron ore production, to reduce its reliance and its exposure to the larger iron ore producers, the Vales, the BHP Billitons and Rio Tintos. And so a 3 million ton a year operation, as one analyst pointed out to me, probably is not that attractive to ArcelorMittal. They're more likely to be interested in or looking at the 18 million ton a year rail project that Baffinland completed a feasibility study on. And in fact, Baffinland also looked internally. They didn't release the numbers because of regulatory issues here in Canada. But they actually looked internally at sort of a blue sky, a 30 million ton, as high as or around 30 million ton a year operation, and that's something really that it's kind of accepted that large deposit that they've got there at Mary River, or group of deposits, could support something like that. And certainly, one analyst, Peter Campbell at Jennings Capital, says that he thinks that's probably more along the lines of what ArcelorMittal is probably interested in. So they'd be looking at something around from the 18 million to as high as the 30 million tons a year producing iron ore. In terms of timing, Baffinland they've said that they think they could get that smaller road haulage study, road haulage project, that they could get that into operation as early as 2013. For the larger projects, obviously it's a big undertaking. There's the rail and the other infrastructure as well as the big project that they'd be looking to build on site. So that would probably, and of course permitting before anything can even get underway. So that would probably, the estimates I'm hearing are around 6 or 7 years from here before we could see any production on that operation.
Thanks, Lizo. That was Lizo, you speaking to me from Toronto, Canada. And that's the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquin in Johannesburg.